Today, millions of investors are watching the same number, the price of SpaceX. They're watching the opening price, the headlines, the hype, but almost nobody is watching the thing that could matter most, 90 days from now. Because the real test of an IPO rarely happens on day one. Sometimes it begins when the excitement fades, when insiders can finally sell, and when the market starts asking harder questions. And that's exactly why the most important question isn't what happens today. It's what happens after day 90. Before we answer that question, we need to separate two things most investors confuse: a great company and a great investment. Before I go any further, let me be clear about what this video is and what it isn't. This isn't a video about SpaceX being a bad company. By almost any measure, it's an extraordinary one. It launches more rockets than entire nations. Starlink now connects millions of people around the world. So if you came here looking for someone to tell you the rockets won't fly, that's not what this is. This is about something different, and in a way, more important, because a great company and a great investment are not always the same thing. And the gap between those two ideas is where investors make some of their biggest mistakes. And to understand why that matters, we need to understand how an IPO actually works. Because the moment a company goes public, most investors think they're entering at the beginning of the story. The reality is very different. Let's build this from the ground up, because everything that follows depends on understanding this one idea. A company like SpaceX has been private for years, which means its shares are owned by a relatively small group of people. If you wanted to buy shares, you couldn't, no matter how much money you had. An IPO is the moment that changes. The company sells a small piece of itself to the public, and for the first time, anyone can buy shares. Most investors think this is where the story begins. But here's the part most people never see. There are actually two different prices involved, not one. The first price is the IPO price. For SpaceX, that's $135 per share. But most ordinary investors never get that price, because by the time the stock starts trading, the race is already underway. And that's why understanding the price matters just as much as understanding the company. Because once you understand how the machine works, the next question becomes obvious. Is SpaceX actually worth the price investors are paying? Most coverage stops at one number, one giant number. And to be fair, it's an extraordinary number. So let's ask a simple question. What exactly are investors paying for? Last year, SpaceX generated roughly $18.7 billion in revenue. That's a serious business, a very serious business. But here's where things get interesting. Investors aren't paying $18 billion. They're paying $1.75 trillion. That's roughly $94 of valuation for every single dollar of revenue. And that doesn't automatically mean the company is overpriced, but it does mean expectations are extremely high. Because when investors pay a price like this, they're not paying for what SpaceX is today. They're paying for what they hope it becomes. And that's where the story starts to change, because the people who got in early aren't looking at the future, they're looking at the calendar. If you've heard anything about the SpaceX IPO, you've probably heard about Day 90. Day 90 became the headline, the date everyone started talking about. And for a while, I thought that was the story too. Then I opened the prospectus, and that's when I realized something. Day 90 isn't the story, it's just one date inside a much bigger calendar. Because SpaceX didn't build one unlock date, it built a sequence. Day 70, Day 90, Day 105, Day 120, Day 135. One unlock by itself may not matter much, but that's not what investors are dealing with. They're dealing with wave after wave of new shares becoming available. And suddenly, Day 90 starts looking very different. Because once you stop looking at one date and start looking at the entire calendar, the real risk becomes impossible to ignore. But the calendar isn't the only thing investors should be watching, because sitting on top of that calendar is a trigger, and it's the part most headlines completely ignore. Here's what the filing says. If SpaceX trades 30% above its IPO price for 5 out of any 10 trading days before the first earnings report, an additional 10% of insider shares can unlock early. The IPO price is $135. So the trigger sits at $175.50. And that's where things get interesting, because the market was already expecting the stock to trade much higher than the IPO price, which means the trigger wasn't sitting in some distant fantasy land. It was much closer than most people realized. One strong week, that's all it could take. So the harder the stock runs, the faster additional insider shares can become available. And that's what changes the way you look at a big opening day pop, because what looks like a celebration may actually be the start of a countdown. Quick pause. I recently started this channel to break down economics in a simple way. We're still at the very beginning, so every subscriber really matters. If this kind of content helps you understand the world better, consider subscribing. It helps me keep going and make even better videos. Thanks. Let's continue. So here's the question. Why would SpaceX build a lockup like this? Why not just do what almost every IPO does and unlock everything after 180 days? Because a single lockup date creates a single problem. Everyone watches it, everyone talks about it, and everyone knows exactly when it arrives. When Rivian's lockup expired, the stock dropped roughly 20% in a single day. Uber hit an all-time low around its lockup expiration. Palantir fell double digits. Suddenly, the standard IPO doesn't look so simple anymore. And that's where the SpaceX structure starts making sense. Instead of one giant cliff, but avoiding a cliff wasn't the only goal, because every unlock also increases the public float, and a larger float changes how institutions see the stock. And then there's the final piece. Predictability. Every insider already knows these dates. Not one opportunity to sell, several. And once you put all three pieces together, the schedule stops looking random and starts looking deliberate. But here's the real question. What happens when those windows finally arrive? Because we've seen this movie before. But here's the part that matters. Everything we've talked about so far is still theory, a calendar, a lockup, a schedule. The real question is, what happens when those dates actually arrive? Because we've seen this movie before, not with SpaceX, with other companies. Let's start with Rivian, because Rivian looked unstoppable. The stock surged after its IPO. Investors rushed in. The story looked perfect. Then the lockup arrived. Ford announced it would sell its stake, and the stock dropped roughly 20% in a single day. Now maybe you're thinking, okay, but that's Rivian. Then look at Uber. Different company, different industry, same calendar. On the day insiders were finally allowed to sell, the stock hit an all-time low. Now it's getting harder to call it a coincidence. Then came Palantir, and this one might be the most important example of all. Retail investors pushed the stock higher, much higher. Then the lockup expired. Insiders sold millions of shares, and the stock fell 13% in a single session. Three companies, three different stories, one repeating pattern. Even Snowflake, the closest thing to SpaceX's staggered schedule, wasn't completely immune. Its final unlock period still dragged the stock lower. Not because it was a bad company, because supply matters. And that's the lesson. The companies were different, the products were different, the industries were different, but the calendar kept showing up. Which brings us back to SpaceX, because there's one date we still haven't talked about, day 366, and once you understand who that date belongs to, the entire structure looks different. Which brings us to the strangest date on the entire calendar, day 366, because that date belongs to Elon Musk. While most insiders can sell much earlier, Elon can't. Same IPO, same stock, completely different incentives. One group is thinking about the next unlock window, the other is thinking a full year ahead. And once you see that, the entire IPO starts looking very different, which leads to the biggest lesson in this entire story. And it has nothing to do with SpaceX. And that's why this story was never really about SpaceX, because the same lesson shows up in almost every IPO. Most investors focus on the headline, the price, the hype, the first day. But the bigger questions are usually hidden underneath. Lockups, float, incentives, expectations. Who can sell? When can they sell? And what happens when they do? Because the advantage isn't access. Most people have access. The advantage is understanding. And the investors who understand the calendar usually see the game differently. Not because they know more, because they know where to look. Because in markets, the biggest opportunities are rarely hidden. They're usually sitting in plain sight. Most people just aren't looking at the right things. And if you want to understand how money really works, that's exactly what we'll keep exploring here on Milio Finance. Thanks for watching.